Good morning, Shashank. The deal is finally done. You've sold your business for 500 crores. The first question is, what's the rationale for selling this business?
Good morning, Darshan. Uh, our focus has been on building a B2C portfolio, and we have been investing over a long period of time in building capabilities for the regulated markets. As you know, we have scaled up our presence in Australia. We are now a top 2 player in Australia. And we have been growing our U.S. business based on the kind of investments that we have made there. We indicated in our last earnings call that we will exit this fiscal year, at a run rate of roughly about 180 to 200 million in the U.S., which is roughly double the rate where we were last year. So clearly, it was a reprioritization of our portfolio. We believe going forward, U.S., Australia, and Africa are going to be the big growth drivers for our business. And clearly, the India business, which is a good business, but where it didn't allow us to focus on all four, and therefore, since it was suboptimal to our portfolio, we believe that it will achieve its full potential under an India-focused company, and that's the rationale for the deal.
Okay, Shashank, was Eris the only one, or were there other players also in bidding in to buy your business?
I'm not at liberty to discuss all suitors for the business. Clearly, we followed a process, and we had conversations. Clearly, there were other people that we had conversations with.
Okay, so 500 crores is what the business will get you post all the tax requirement and other forms of payment. What is the net that will come into the company?
Net proceeds will be 400 crores, which will be used to repay debt.
Okay. What is the debt situation currently, and how much will it be post this entire deal, post paying this 400 crores?
Currently, the debt is about 2,400 crores.
Okay.
There are two elements to how you should look at it from a future perspective. One is, of course, what we are going to pay down immediately. So that's 400 crores. And the other is what will get pushed out with the demerger of the commodity API business in terms of the Solara demerger, which is only awaiting NCLT approval now and should happen in due course. With that, we should be down to about 1,600 crores of debt.
Anything else that pretty much would be non-core for you that you would be looking to divest from the company?
No, so this is clearly now the three growth drivers, as I said. There is nothing else that is non-core. We have been, as you know, in the past year, busy trying to focus our portfolio around our strategy. And so we have taken several corporate actions, whether it was spin-off of the generics business in Africa, or it was the demerger of the commodity API business, and now the sale of the India generics business. With that, we believe we have now a focused portfolio that we want to concentrate on.
Okay, my final question is, no doubt the interest cost will also come down. How much will that come down? And because your India business was built on a lot of acquisitions, there was a lot of amortization costs that happened. What will be the impact there?
Net impact of this transaction is an improvement in our EBITDA to PAT conversion, clearly on account of both these benefits. I would say net, our EPS will sustainably go up by about 6 rupees.
Okay. Many thanks, Shashank, and all the best for the way going ahead.
Thank you.